What is going on, Zinger Nation? Welcome back to another After Hours show. I'm your host, Ryan Rozbiani. We've got a lot to talk about today. Clearly, it's been one of those massive earning days. Disney reported, Wish reported, SoFi, Airbnb, Givo, Tattooed Chef, Sundial. We got seven major stocks that I know retail loves that have reported today. So we have to talk about them. Of course, we have to talk about them. And we're going to start off, obviously, as we do with the show. We talk about the indices. We talk about the stocks that are important, which we're going to talk about the earnings. Indices, I'm going to do very quickly. And then we're going to jump into our massive earnings. While I'm doing that, do me a solid, smash the like button, share this with a friend or two. Let's get some people in here talking. So, Spy, if you are watching these streams, if you saw my CPI video, I hit my price target. I said 445 by the end of the week if CPI comes back good. And here we go, 445. We did it. Jeff, what's going on, brother? Welcome back. And we can see here we hit 445 on SPY. Did very well. Very happy with that one. QQQ. And again, remember, today we're machine gunning through these. QQQ is also doing well. Has had 2 red days. But again, it's respecting the 20 moving average. Doing its thing. It's doing well. And IWM, not doing so hot. Remember, the pennies are struggling. This has kind of been the resistance line that they need to cross over. They haven't been doing a very good job about doing that, but that's okay. It's fighting. Will it get there? We'll have to wait and see. Last but certainly not least, Bitcoin, a hot topic surrounding a lot of the stocks that we talk about on this show, a lot of the stocks that retail likes to trade. As you can see here, Bitcoin has been having quite a bit of trouble with this area. It does not want to. The 200 moving average was the kind of the area that we crossed over, and now it seems like we've lost the 200 moving average. That was our support for 2 days. It was resistance for a long time. If we go back in here, it was resistance for a long time, and we broke it, but now we've lost it. But all hope is not lost, in my opinion. If we look at the weekly chart, we can see that things are still looking great on the weekly chart. And I have to switch the views, and we can probably see more green in the future. But again, patience is key with Bitcoin. It takes time. Fred, what is going on? How you doing? Wish is down after hours. Can you stream Q2? We're going to talk about it right now. Isn't it supposed to rise? I'm not sure what you're asking, but let's do it. Let's talk about it. Let's jump into these earnings reports. We're going to start off with Wish because I know a lot of people like this stock. A lot of people are big into this one. So we're going to definitely talk about it, and we've got more stuff to jump in as we do it. So I just got to put the banners up. By the way, if you want to follow me on Twitter, you want to subscribe to me on YouTube, ryanstocks.com. All the links are there, and you can my Twitter's there, Instagram. You can sign up for Benzinga Pro for free for 2-week trial, and if you'd like to sign up for a full membership, you can use promo code RyanR. Patreon is there with the Discord, educational material, watch list, and my YouTube channel. So let's jump into Wish. Let's take a look at these earnings that came in, second quarter earnings and financials. Let's pop it open. Let's jump right into it. So we're looking at the last 3 months, the last 6 months. Now the formatting on this is quite ugly, but let me see if I can, on the investor relations website, if it's a little cleaner there. Sometimes they have like a PDF and it's a little bit cleaner. There we go. See, that's a lot cleaner. Okay, the banner can stay. That's fine. So we can see the last 3 months, revenue is down. Core marketplace is down. Product boost is up by 5. I believe these numbers are in the millions. Yep, millions. Marketplace revenue is down significantly. Logistics revenue, though, has about over doubled. And you can see here the percentages year over year, down 6%, down 32%, up 11%, down 29%, up 126%. Now, if we look at the 6-month time period, revenue is up over the 6-month time period, 25%. Product boost is down 4%. Product boost is up 12%. Core marketplace is down 4%. Marketplace revenue is down 3%, and logistics revenue is up 200%. Net loss, this is where they took a massive hit, is down 111 million from 11 million year over year, 17% down and 2% down here. And it's not great. They're quite bad earnings. I'll be honest with you. They're terrible earnings that have come out for this company. We can see here EPS missed by 0.04. This is better to look at here. Q2 adjusted loss of 67 million versus a gain of 16 million in the same quarter last year. So they significantly have lost a ton of money. What is going on, everyone? I see all of you in the chat. I really appreciate you. Larry, what is going on? Happy belated birthday to Larry. Larry had a birthday yesterday. Happy birthday, Larry. We're going to talk about SoFi. We're going to be talking about Wish. Everything that you see in the title, we're going to talk about. We just can't talk about them all at the same time, but I promise you we're going to be talking about it. Stick around. hit the like button. I'm going to jump into all of them. I promise you we will do that. Just have some patience and we'll get there. Wish are trading lower after worse earnings. As we can see here, Wish is now down about 20%. So let's take a look at the chart for Wish. Now, Wish is a stock that I alerted my Patreon members to yesterday. Last night I said, hey, let's take a look at what could happen with Wish. Amazon missed, Coupang missed. These are two big marketplace style companies. Wish might also miss as well. So we bought some puts on it. I can show you the proof that we did that. I'll show you the alert. I posted it here, a screenshot of it. Wish puts, this is based on Amazon and Coupang both missing earnings. I imagine Wish will too. They've all tanked. They have tanked in the past 3 earnings. I'm talking about Wish. This is very risky in that it has a massive following that might backhold. I will signal if I add, and I signaled that I added this morning. And we did very well, by the way. If you'd like to join that Patreon Discord, the link is at ryanstocks.com, second tile. A lot of educational material, and a lot of signalings. We've been destroying it this week. Let's go to something like a 5-minute chart on Wish and take a look at exactly what happened. As you can see here, there's no sign of a recovery. We went down to a low 735. It looks like where it kind of bounced. Again, it's not confirmation of a bounce, of a reversal, or anything like that, because we are in the after hours. We don't have enough volume to actually understand what's going to happen. We saw this kind of move drop down with Coupang yesterday, and it began to recover in the early morning hours. And it wasn't so bad. It was down 12%, opened up down about 6%. So we can see that there's a lot that is happening here. We can take a look at it on the daily chart. We can see what's going on here. You can see we are down to the levels that we were here. Support is at 752. I discussed this with my Patreon members, and when I sent them the chart about this, I posted it in our chat. I said 752 is like the master support that we've had here. So I'm going to draw a line here at 752. We are below it now. I'm going to put it at 750 because what's the point? We're at 750 now. 2 cents won't make too much of a difference. I don't want to like kill myself trying to get it exactly at the 2 cent mark because Webull can sometimes be iffy. Hold on, let me see. There we go. That's why I did it. I need to align the dot. I had the dot on the wrong candle. So we can see here that this is kind of the master support. Now, what happens if we lose 752? We don't know. This is the lowest the stock has ever been. The lowest the stock has ever been has been 752. And we're going to see if it bounces at 752 or if it continues to decline. We'll be setting up a new support level tomorrow. This is risky, dangerous, and ugly. That's what's happening here. I discussed Wish's decline in that post. Past 3 quarters, it has done, like, even if they've done decent, right? I haven't been watching it for the past 3 quarters. It hasn't been important to me, but it had declined. You have to look at these things. You have to look at the sector overall. You have to say, hey, I'm in Wish. Let me see the other companies that are parallel to it, like Amazon, like Coupang. See how they did on their earnings, and then parallel that, because you have to look at it. Like Coupang is in the Asian markets. Amazon is in the worldwide markets. And if they missed, why wouldn't Wish miss as well? That was my thought process going into it. So that was my thought with that one. It played out like I thought it would. Conviction was there. Thought process was there. I do hope that no one was hurt by this stock because I don't want anyone to ever lose money because I know how deterring and painful it is to lose money as a retail trader. So I don't want you to ever do that. But I do want you to listen to Paulina and smash that like button, ladies and gentlemen. Smash that like button. Let's keep going. So Wish, we will come back to it. I promise several times throughout the show. If there's any specific questions, I will definitely take them. The Nubo says, I'm talking about Wish stock that has come and hit about a 52-week lowest. Why did it report losses? They reported quite bad earnings, my friend. So let me show you again one more time in case you just showed up. So last year, this time, they had $16 million in gain. This year, they are reporting $67 million in losses for their adjusted EBITDA. Same quarter last year, the sales missed 665 million, missed the 722 million estimates. So they even missed their sales estimate, and their EPS missed by 0.04, whatever the estimate was. For some reason, it doesn't say it here. I don't know it off the top of my head. I could check financials here to see if there's an estimate for it. Usually we have it under earnings. Sometimes, yeah, estimated EPS was looks like negative 14. I guess it came at negative 18. Let me just double check if we have it here. Usually they don't put it on these pretty charts. Sometimes they don't give you the full EPS. Maybe the PDF version has it. Now it's the same 3-page thing. I'd need the quarterly report. I'd need the 10K. I'm sorry, the 10Q. We can check SEC quarterly results live at the IR website. Let me see. Hold on. This is important. Give me 1 second. Shareholders letter might have it in there. That's okay. Pretty presentation. I gotta give it to them. They do have nice presentations, but again, you can't hide this. This is a big loss right here. 111 million of loss. That's not good. Let me make it a little bigger so you guys can see as well. A lot of writing, which is not good. You usually lead with the numbers if the results are good, but hold on, we might have it here. Here's our statement of operations. We can see here, yep, negative 18. And the estimate was negative 14, as we can see here in Benzinga Pro. By the way, Benzinga Pro, free trial. If you'd like to sign up, you click this button, sign up, 2-week free trial. If you want to sign up and have it forever, we could do it. SoFi is next. Let's do it. SoFi. Everyone wants SoFi. Look, if we're going to do SoFi, I'm going to need you to smash that like button for me. Ignite it. It's literally free. That's the only thing we ask of you is to hit that like button. If you can do that for me, it would mean a lot. Thank you very much. Let's jump into SoFi. All right, let's go to the news tab on SoFi. SoFi is declining dramatically, down 10%. If you've seen me discuss SoFi on the channel, I've always said I'd like to buy SoFi between $13 and $15 a share just because it was a SPAC. Major investors came in at $10. You never want to pay too much more than they paid, but the company has accrued more value, in my opinion, since then. But let's talk about it. Their second quarterly results. I do want to go to their website because this is, again, another hodgepodge website that does not look great, in my opinion, at least, right? So let's go to... Let me see if I can go to SoFi's actual website, which we should be able to go to, SoFi.com, and then we'll go to Investor Relations. And if you guys hear some thunderstorms outside, you could probably infer that I'm in New York. We're in the middle of a thunderstorm, and thunder or lightning. I can't identify that one right now for you. But where is Investor? Company, investors. There we go. I'm zoomed out for some reason, it looks like, but that's okay. Here we go. Quarterly results. Boom, straight to the PDF. Thank you so much, SoFi. Again, it looks like if you look at SoFi and Wish have very parallel colors. All right, so let's take a look at it. Let me zoom in, make sure you guys can all see everything. Members have increased from 2281 to 2560. These numbers are in the thousands, so from 2.2 mil to 2.5 mil. Products have increased in the thousands from 3.1 to 3.67. Products by segment. You can see here, if we kind of take a look here, their lending products, if we look quarter over quarter, is up. Quarter over quarter for the financial services is also up. Year over year, you can clearly see that it's also up as well. Technology platform accounts have been steadily increasing, not too much, but 9 million up. But again, 9 million is still a significant number up. But we have to find out what's wrong here. What was the big deterrent that's causing such a drop in the stock price? Total year-over-year member growth of 113% accelerated for 8th consecutive quarters to 2.6 mil. Total products of 3.7 million, up 123% year-over-year. Record quarterly net revenues up 101% year over year, and adjusted net revenue up 74% year over year, being successful business combination and public listed NASDAQ. So that's talking about their SPAC and I believe their Galileo acquisition. Second quarter proved to be another full quarter for milestones of SoFi. Okay, let's get to there it is. This is it. That's what's causing you some issues there. Year over year, you're in loss territory. Net income is coming in at a loss. Total revenue is up, but your net income is now at a loss. You had these numbers are in the thousands, so 7.8 mil. Now you're down 165 mil. Now, what happened there? I'm not sure. We'll have to keep looking, and we'll probably have an explanation of what happened there. Consolidated non-GAAP is up, and then so is adjusted EBITDA is up, which is good. You went from a negative to a positive, which is good. Consolidated results. Here we go. This is the big kahuna right here. We'll have to see what it is. SoFi recorded here it is. SoFi recorded 165.3 million net loss in the Q2 of 2021 compared to net income of 7.8 million last year's second quarter. We remeasured our valuation allowance during 2020 as a result of the deferred tax liabilities recognition in connection with our acquisition of Galileo, which decreased the valuation allowance by 99.8 million. The absence of the tax benefit, together with significant non-cash stock-based compensation expenses and fair value changes in warrants primarily related to the fair market value of SoFi stock, were the largest contributors to our second quarter loss. So it was the Galileo acquisition, the tax benefits missing, and warrants. So we're going to definitely take a look at their financial statements, and I'll show you exactly what's happening there. Second quarter EBITDA adjusted of 11.1. Let's zoom out again. They're putting this here again. We saw that already. Why would they put it twice? Lending segment. So the lending segment is doing better. This is a thing that I know Larry, if Larry's watching, talks about this a lot, is their lending. And I assume in going into the next quarter, as universities are opening up and it's a brand new like university year cycle, you'll see this go up as well. Their lending jumped 73%. Their servicing rights went down 99%. The residual interest classified as debt is up 122%. Their contributing profit is up 80% from this, and their adjusted net lending revenue is up 47%. Excuse me. Home loans, personal loans, and student loans are all up 66%. Personal loans are their biggest one, that's up 188. Student loans, I imagine, will also go up as well as we go into the next quarter, but we'll have to wait and see. Nothing is ever guaranteed. Lending products are also up across the board. Financial segments and financial services segment is up 602% in total net revenue, which is fantastic. Directly attributed expenses are up 25%. That's okay. Contributing losses up 20%. So I'm gonna okay, let's keep going. These are important. So across the board, there are financial products, money, investing, credit cards, relay, and at work are all doing fantastic. Overall, up 243%. Congratulations. The technology platform segment results are their total number of accounts went up 119%. That's huge. I predicted this in the SoFi video I did. I did a 3-minute SoFi DD video on my YouTube channel at ryanstocks.com. I talked about this. I said their accounts are also going to go up. We saw a jump in Robinhood. We saw a jump in Webull. We would have seen a jump in SoFi as well, and we did. Total net revenue for the technology platform segment results of operations across the board up 138, 367% for their expenses are up. Expenses go up as you expand. Expenses will go up, and their contributing profit is up 8%. Recent events. Okay, so this is essentially the SPAC merger guidance and outlook. This is important. This is very, very, very important. You always want to focus on guidance. This is the thing. You can beat EPS, you can beat revenue and sales, but if you report lower guidance, the stock will take a hit. So let's see if that's what happened. I don't think so. As far as I remember, they reaffirmed their guidance for the next quarter. By the way, before we jump into this, I want to ask you to do me a favor and smash the like button. The algorithm is very, very important, and we're a bit stuck to the algorithms. If you could do me a solid and smash the like button, that would mean a lot to me, and we can keep going. Also, if you'd like to follow me on Twitter, that would mean a lot as well. It's linked at ryanstocks.com, and let's keep going. By the way, just one thing about SoFi that I want to interject on from a personal note. I have been playing calls and puts on SoFi for the past, I want to say 2 to 3 weeks now, doing very well with it in the Patreon and the Discord. Didn't hold it through. I sent an alert like about 3 hours ago. My SoFi calls were up 40%. I said, I'm selling. I don't want to hold through it. I don't want to deal with it. It's too risky. And thankfully we didn't. We 40% would have been literally lost. We would have been at a loss right now if we held it. There were $17 calls on SoFi for $8.20. Thankfully we got out very, very well. So guidance and outlook. By the way, if you'd like to sign up for that, the link is at ryanstocks.com. Second tile. Just wanted to remind you for the 100th time. Second quarter 2021 adjusted net revenue of $237 million. What the heck? SoFi is killing me, Matt. I get you, buddy. I got you, buddy. I'm going to tell you exactly why SoFi is killing me. We just discussed it 2 seconds ago. They had a loss, but I'm going to explain to you what that loss is so you guys can understand it and decide if you want to keep holding or not. No such thing as a free lunch, people. Ryan's giving you his time. Hit the like button in return. Thank you, Paulina. You're amazing. And Jeff, my man. Jeff's the man. Shout out to Jeff. Shout out to Jeff. You can see here, there's some people who are taking advantage of the SoFi dip, like this guy right here, 1,000 shares. Shout out to you. 1,000 shares of SoFi. Remember, you can sell covered calls on those if you want to make passive income on the way, hopefully up. Hopefully up. But if you don't know what that is, definitely look into it. And that was not financial advice as per the banner below. So let's take a look at its second quarter SoFi 2021 adjusted net revenue of $273 million. Exceeded second quarter guidance of 215. So if you saw my SoFi video, I said that they would exceed their guidance. They always tend to do that, which is fantastic. That should be a good sign. They aim low, they hit high. That's how these guys operate, and I like that. They exceeded it by 10% at the low end and 8% at the high end, which is fantastic. The fact that they're beating their high end guidance tells me that whoever's doing their guidance for them isn't an idiot. It's someone who is taking the time, or a team that's taking the time to make sure that they're adjusting in for kind of variations that can occur in the market, things that could shake things up. So they're doing very well. Adjusted EBITDA of $11 million for the second quarter exceeded the quarterly guidance of $8 million negatively to $2 million and to $19 million on the low end and $9 million on the high end. So they beat that as well. So they had guidance of 11 to -8, and they beat that too as well. It looks like it, if I'm understanding that correctly. Okay, this is very important as we're going into Q3. Keep this in mind. This is the one paragraph that you need to pay attention to if you want to plan to buy shares or if you'd like to sell your shares. So this is the most important paragraph. Management expects continued strong growth into Q3 of 2021. With expected adjusted net revenue of $245 million to $255 million and expected adjusted EBITDA of -$7 to $3 million. Management reiterates its full year 2021 guidance of an adjusted net revenue of 980 and an adjusted EBITDA of 27 million. So they're keeping the same guidance, which is great. They're bringing in the guidance that they had. That's very good. Now, some people react negatively to flat guidance. I don't. I believe in this company because, as you can see here, we're about 3 quarters in right now of them as a public company, and they've always beat guidance. So I believe that they could come in and beat that 980 mil revenue, and that might even come in at a bill. But again, I'm very confident in the guidance that they give, so it doesn't bother me. So for me personally, I do plan to buy more SoFi if we go under 15 or at 15, depending on how it reacts into tomorrow and into next week. I've slowly been nibbling. When we went under 15, I bought. When we were at 15, I bought. So I'm nibbling. And I'm someone who bought it during the SPAC era when it was like 12, 13 bucks. So for me, I'm fine doing this. This is despite lowering our expectations for the second half student loan refinancing revenue by 40 million due to the extension of the CARES Act moratorium by student loan payments for September 30th, 2021 to January 2022. So if you're familiar with what's going on with the Rona, the moratorium for student loans was extended to 2022. So they're still frozen. So this is going to hurt their revenue by 40 mil. So now they're adjusting into that, and they're still going to be fine. And they're also reducing their technology platform revenue by 12 billion due to the minority stake in Apex being bought back. Management will further address third quarter and full year guidance in the quarterly earnings call. So whenever the earnings call is, they're going to dive deeper more into that, and we'll get more information. And I believe the earnings call is happening or has already happened live at 5 p.m. Eastern Standard Time to discuss it. So it looks like it's already happening. So if we can pull up the best indicator of how that's going is looking at the chart, but I want to go into their financial statements so I can show you the warrants. If they have it here, we'll be very lucky. Thank goodness they're here. So I want to show you exactly why the losses are happening, what the biggest deterring factor on the balance sheet is, and then you can obviously put that together. So the losses, as you can see, this is the big 165 mil that's being a massive loss, and that's primarily attributed to warrants from my understanding of looking at them previously. So fair change in warrant liabilities here, it is about $71 million in warrants. Now, warrants are a liability. In the past, warrants used to be written as an asset. The SEC said no, they have to be written as a liability because they bring dilution with them. Hence why this is a loss of 70 million. Now, if you removed it, the company would still be at a loss. This isn't the only thing that's causing the loss. You also have the stock-based expense that is happening that is causing a lot of this factors. Also, depreciation and amortization is also causing one. So these are the big 3 things that are causing it. Again, warrants are the big one. So if we look at number 5, you can see here that it will tell us what the situation with warrants is. In 2019, Socio Finance Series H warrants in connection, so that's the SPAC warrants. Therefore, we will not be measuring Series H warrants as fair valuation going on to subsequent to 2021. That's, again, the change that happened. So, again, it's just telling us that this is from these are the SoFi W warrants from the IPOE merger. Now, if the stock hits 18 and holds 18 for 20 consecutive trading days, and again, this is they're going to have to call on the warrants in October, so we'll get another dip buy opportunity in October. That will wipe out, and this will turn into cash. So you'll get 70. I believe these are in the thousands. So you get about 71 million will go to cash, and it will disappear from here. Now, the stock-based expense is what's curious to me as to what that is. What's causing them this expense, but it doesn't have like a line item or like a footnote for me to understand what's going on. So let me see what's going on here. I'm seeing some comments. So thankfully I sold SoFi 10 minutes before the bell at 1740. Congratulations, J-Rod. You did great. You saved yourself a lot of cash. J-Rod, I wish I would have done the same thing for profit. Richard, I totally get you, brother. It's rough sometimes, but again, it is what it is. Depends on your plan. If you're a short-term investor in it, I get it. If you're a long-term investor in it like I am, who cares? Let it do its thing. As long as the company is doing what it needs to do and we're reading these statements together and we can see they're doing great, there's no worries here. Cash and cash equivalents, the cash is great. You can see the total assets are in the $7.6 billion. So these are in the thousands. So you want to add 3 more zeros. So they're in 7.6 billion, I believe. Yep, 7.6 billion, 7.65 billion. That's a lot of dinero right there, man. Liabilities are there as well. Liabilities are there, as you can see here. Warrants. You can see more warrants on their liability sheet. 240 million in warrants on their liability sheet, which is annoying. I don't like warrants. I don't like warrants at all. That's why I stay away from SPACs mostly now. I wait for them to de-SPAC, wait for their lockups to end, and then I start coming in. So the loss, again, the biggest thing is the warrants, and that's a real heartbreaker. That's what a lot of these SPACs get hurt from, or these warrants, and they will hurt the balance sheets. And we've seen it affect many other companies as well. They have warrants on the balance sheet. They have warrant. I'm sorry, not on the balance sheet. They got warrants, and it affects them for a loss. SoFi will be fine. You will definitely get that back. Richard, I agree with you, J-Rod. I think SoFi is going to be great. All right, so we did SoFi. Let's go to the next one. We've got more and more to talk about. Disney. We got to talk about Disney, the mouse in the house. I was telling you folks, if you follow me on Twitter, if you're not following me on Twitter, you're missing out on these opportunities that I kind of throw out there of telling you what I'm doing, at least. For this guy, for Disney, I've been saying it for months now. I can show you. Let me see if I can pull up the tweet. Disney. Here we go. Diz from Ryan. I got to put my last name in. Here we go. Bum, bum, bum. So that's the tweet from today. But I've been posting it for a while now. I've been saying, hey, Disney's going to 200. Disney's going to go to 200. Here we go. From March, Disney's going to 200. I'm holding. I've been tweeting about it. I've been talking about it. I've been adding myself personally on Disney. And here we go. Let's talk about their results. I'd love to go to their investor relations website, if that's okay with you guys, because I've never been there. No, that's a lie. I've been there, but I've never been there recently. I just really go off of the Benzinga news for this kind of stuff. But I'd love to see their reports. Here we go. Q3 FY earnings call. We don't want to listen to earnings call. We just want to see the report. So let's jump into it. Cool. Only 19 pages. Wow. All right. Here we go. This is the big thing that happened here. Nice little paragraph to kind of summarize everything that happened. EPS of 0.8 from 0.08 from the prior year quarter. So year over year, up from 0.8 to 0.80, which is great. Diluted EPS for the past 9 months increased from 102 compared to a loss of 117. So it went from a loss to a gain, which is great. Diluted EPS for the 9 months decreased 14%. Okay, that's all right. No biggie. So revenues are up 45%. Total segment operating income is up over 100%. Net income from continued operations is up. They went from a negative to a positive. If you go from a negative to positive, you can't do a math percentage on that. It's literally like infinity up, because if you go from 0 to 1, it's literally infinity percent up. Diluted EPS is up from negative. We're up over 100% on the EPS. Cash provided from continued operations is up. Free cash flow is up 16%. Do you guys know how massive that is for a company of this size? J-Rod, shout out to you for the follow, man. Thank you. This is a massive, massive increase. This is Disney. This isn't like your mom and pop shop. This is a massive company. Oh, wow. I love this company so much. It's one of my top 5 largest holdings personally. Operating loss, continued income, they went from an operating loss of negative 4.84. I believe these numbers in the millions, so billion, to now 995. So, okay, so we're doing good there. We're doing good here. We're doing good here. I was hoping for like a cool, like the SoFi wish style presentation. I guess when you get close to like, what is Disney's valuation right now? Is Disney trading at a $1 trillion market cap yet? No, they're in the billions. They're not in the trillions. They'll get there one day. I confidently believe Disney will one day be a $1 trillion company, but not yet. They need to get there. But not yet. But I like to see them get to 500 billion soon. But look at that. It's doing well, man. Up 5 points in the after hours. Gotta love Disney. All right, so their parks and distributions were up 18%. This is quarter over quarter, excuse me, not year over year. Quarter over quarter, up 18%. 9 month ending up 4%. That's big. Total revenue up 45%. This is from the parks segment of it. Media, this is big. Media and entertainment distribution is down 32 points, but overall segment operating income is up over 100%. So I do like the headlines that we got on Benzinga. So I'm going to focus on those right now, because monsters. I was like, whoa, what the heck is that? Why is Benzinga showing me a GIF? So here we go. EPS beat by 25, beats on revenues. That's the first one that came in. So as you can see here, they beat on their EPS. They beat on sales, on distribution of entertainment and media, up 12.681 billion, up 18% year over year. Products up over 100% year over year. This is big. Q3 paid subscribers, 116 million, up 57.5 million year over year. So it looks like in the past year, Disney's just been throwing people into Disney Plus. Also, Disney Plus will continue to grow. Amazon's now giving away 6 months of free Disney Plus if you're a Prime member. Why? I have no idea. I got the email. I was shocked at it as well myself, but hey, it is what it is. Hulu, which Disney has a stake in, it was also up. Where'd it go? Hulu subscribers up 21% year over year, which is huge. Disney Plus average monthly sales paid per sub down about 10% year over year to $4.16 per subscriber. But in reality, like, what do you expect from subscribers to pay, like to buy those movies and stuff? That won't really happen, especially now that movie theaters are opening up. This number to me is negligible. It's not important. ESPN Plus, very, very important in my opinion. Up 8.5 million year over year. Walt Disney's corporate statement, which we were, I believe that's what we were looking at. Yeah, that's what we were looking at. It's just a different formatted version of it. Shares are trading higher, jumps 5% on financials. Disney shares surge. All right, let's take a look at Disney's chart. So as you can look here, Disney has been struggling. We were in this wedge. We broke out. Black Widow broke us out. Then we had a big, we had that little kind of market spurt that happened where the market kind of, we had that red day on SPY. We were down like 2 points on SPY, 2% on SPY. It took a hit. The Black Widow lawsuit happened. We took a hit. So this wedge became kind of invalidated. So we have to kind of like throw this out, or let's redraw it. Let's see if we can, let's kind of figure out our support and resistance areas here. I like to use the wicks sometimes, not always. But again, this line is now completely useless. We have to redraw our resistance again together. So let's do it. Now, this is a weird chart because like you can draw it like this and say, oh, look, it broke out. Or you can draw it like this. That's the thing about charts. So like they're art, right? So it's like they're not really art, but like if I was to draw it, I'd draw it like that. If it was me, right? And look, bounced down, bounced out. Tomorrow you're going to open with the gap up all the way up here, ladies and gentlemen. Oh my God, this is so juicy because take a look at this. Our previous resistance was 186. So let me drop that line right here. 186. Where are you? 186.29. Now, if we go to like a 1 hour chart, we are clean above that. Clean 1 hour, clean above that. We're in the 180, 189.88 area, which is fantastically awesome and huge. So we have to now take a look at the daily chart and see where's our next resistance point that we have to be watching for tomorrow. As you can see here, this was a resistance in the past. We've now crossed it. I'm going to put a line above this here so that we can kind of, it makes it a little easier for us instead of kind of having to eyeball 189 a lot. We can kind of draw that. There we go. Turn this red, come back to the daily chart. Pretty straightforward. Take a look at that. We're hitting previous resistance points here. Now, the path to 200 is there, in my opinion, and by the end of the year, it is definitely there. I still stand by that we will get to 200. We've gotten to 200. We've tested 200. It was rejected. This was during the massive run-up, but this happened. This wasn't during February. This was in March. So I believe that we can definitely get there. That's why, like, I was nibbling when we got down here again. But I do think it's definitely a possibility for us. I'm going to turn Bollinger Bands off for a second so I can kind of rescale my candles like that. Beautiful. Let's draw some Fibonacci's. Draw some fibs for us. Now you might be saying, what are you doing? Just give me 1 second. Stand by me. I'm trying to kind of map our pattern back to 200. So we have some extra white lines there. So I'm going to turn our Fibonacci's into dotted lines so that they stand out a little bit more. And I'm going to change the color to light blue. Okay, so as you can see clearly here, 189 is our 61.8% Fibonacci level. We will have finally broken out of our downward trend on Disney if this goes through. So I'm going to delete this line because it's not significant. We have a parallel to that resistance here on our fib level. So if we break out of this and these wedge points are no longer needed, this bottom line, we don't care anymore. We can literally go by purely our Fibonacci levels. That is all we need right now. That's the beauty of fibs. They literally will kind of map themselves to where you need them to be 95% of the time, for me at least, for the way that I'm trading. Now, some people might be saying you're mapping it too high. You should map it here, but we are already here. So I want to kind of get I like to sometimes do a year-to-date or 6-month time period thing. We're in August, so if we're taking it from March, what is that, 8 minus 3, about 5, a little bit more than 5 months, and that's okay. This is a stock that needs that kind of movement. So as you can see here, came down into a downtrend, was trading sideways, essentially tried to break out above this 50% to enter the upward trajectory. But it didn't. It rejected, came back down again, retested. Earnings finally shot us up. There was a lot of fear about earnings, so I think that's what's holding the stock back. And if we look in the past, earnings is one thing that kind of shoots the stock up. Here, it wasn't enough to do much for us because, again, this earnings was, it will tell us the date, was in May. May was, again, one of the shakiest time periods. In the beginning of March to May was very shaky. But if you look in the past, Disney's earnings have always been something that have projectiled the stock upward. Take a look at this. It's synonymous with gap ups and upward trajectory movements. So this is beautiful. This is a fantastic movement. Our path to 200 is there. When will we get there? I'm still sticking by end of the year. I don't think that it's going to be a clear shot to 200. If it does, fantastic. But we need to get over the 189.30 area. Then we need to get over 195. Then we'll get to 200. So literally take it $1 at a time with this stock. So what I'm going to do as well is I'm going to definitely take a look at a few of our other earnings that also came in fairly quickly. 1 second. Sorry, I had to reply to a message real quick. I've got the Patreon members messaging me. A few of them DM me, and one of the guys is so happy about Disney. He goes, Disney, yes, I bought it. It's because he's one of our newer guys. He's a newer investor, and he's adding to his long account. And one of the things I told him was like, I said, I like Disney. I'm adding Disney. He goes, you know what? I'm going to add Disney too. And he added in the 177s, I think. And here we are now. And like, it feels good. It feels really good for me when my Patreon members are making money, when they're doing well, when they're learning, which is the most important part. That always makes me happy. Because it's really about learning at the end of the day about the stock market, learning, understanding it. That's why, like, we bought Wish puts, because we understood the sentiment of the market, where it was going, where the true market sentiment was, not just retail market sentiment, the true market sentiment. And you could sign up, by the way. Go to ryanstocks.com. Links in the description, second tile, and you can join the Patreon, join our trading family. It links it to a private Discord that we have, and you can join us and party with us and learn with us and trade. And it does have a course. If you sign up for the Tesla or Google tier, you will get access to my technical analysis and the psychology of building wealth course. So you'll get access to both of those courses that I'm building onto. I've got 5 new videos actually coming out tonight on them. So after this, I'm pumping out those 5 new videos as well. Let's keep going. So I want to talk about Tattooed Chef. I know Tattooed Chef is another stock that has good, not that bad. Okay. All right. We got to talk about the chef. All right. So clearly none of these drawings stand anymore. So we're going to wipe the board clean. That's like, you ever like been to like the school teacher just wipes the board clean? It's like, all right, we got to start from scratch. You kids are dumb. We got to start from scratch. And I'm talking to myself here. I'm like, nothing panned out. Everything just fell. Dude, I'm getting so many messages about Wish. Like, come on. Like, I never want to bash on a stock, but Wish to me has a lot more bear than bull case. Here it's more attractive, obviously, at $7. I like it way better than when it was at $10. Let's go to Wish real quick. Let me show you. Let me talk about Wish real quick. Look, Wish is now essentially the 50. It looks like that's the area that it's kind of respecting. That you have a little bit of support down here at $7.35, which I'll throw a line there as well. To kind of map it parallel to that. I'm going to turn this one crimson red, like super red. I'm going to make it darker because that's like your sort of quote unquote master support. Now you can lose that, and then I'm going to turn this one orange. This is the thing with Wish. Wish has a lot of logistical problems. It's a company that ships, and you buy, sell, it ships stuff. It's kind of like a very, very cheap Amazon, like an Alibaba style situation. One of those companies where it's like cheap crap and you could buy it. Sure, they have great stuff there as well. Don't get me wrong. I don't want to talk bad about them, but when you're worldwide, when you're known about it, there's even memes about it, like this is the wish.com. Like I'm the wish.com version of Ryan Reynolds, right? Like I'm not that great. He's way better, whatever, right? He's got more money, whatever. But when you're looking at a company, right, and you want to understand them, you want to get the true understanding of where they're going, you need to look at the company not just from the income statement, balance sheet, cash flow, stock charts. You need to look at what the world is looking at them. Are they making these changes? Are they doing what's needed to be done to become at the level where they need to be, where they can grow? And unfortunately, at this time, they are not. They are not doing that. That's why I haven't bought into it. Now, could I? Am I watching it? Cheaper down here. I do like it. I do like it here because I never believed in it up here. Never did. Never believed in it up here. Now, I'll watch it. Maybe what is the free float? We need a calculator. I'd like them closer to a 5 bill valuation, which we're probably at now. What would that be? 1.8, not 7.8. 1.8. I always do bad when I type in my excuse me. I type without looking at the number pad. I always do bad. 0.8 times the 5.52 bill. So we're down 20%. Yeah. So we're at a 4.4 billion valuation right now. So the valuation dropped about a lot. Because your market cap, which I call the true valuation of a company, is your market cap. That's what the market is valuing you at, is now down 20%. So I just a simple on paper thing, and we can test that again. You take the shares outstanding 462, 260,000. Now we don't have the exact number, so it's going to be off times $7.61. As you can see, this is showing me 3.5 million, and there's the other shares that are there that also account for this market cap. This is just the free float that's available. We can do the shares outstanding. That's a much better and closer number to that. 4.61. So yeah, you see that you do shares outstanding because shares free float accounts for what you have. It doesn't account for all the free float shares. But again, we're at about a 4.46 billion valuation. Realistically, if the stock comes down to $7, I might buy some and just forget about it. Right? That's where I'm seeing it. But again, I could be wrong. We have two strong-ish. Ish is the key word. At 7.35 and 7.52 are the support levels that we kind of are watching right now and keeping an eye on. Because what can happen is tomorrow markets can open and you can follow a parallel thing that happened to Coupang. So if you take a look at Coupang tanked on earnings as well. We go to an hourly chart. If you were watching my podcast, we started a new podcast, myself, Sung, Larry, and Fake. We did a podcast. It's on my YouTube channel, which you can get at ryanstocks.com. First tile is the YouTube. We did a whole thing when Coupang did their results, and the stock tanked. I think it tanked about 13% at a certain point. We can check right now. They tanked at their lowest 15%. So they tanked 15%. But as you can see here over time, as we kind of went into market open, it went from 15% to 10%. And then throughout the day, it wasn't that bad. It only closed down about 8%, and then 1% in the after. So about 9%, right? So a parallel thing could happen with Wish going into tomorrow. Now, the converse of that could also happen is you can open tomorrow as TD opens up, as Robinhood opens up, as the markets open up. You can see a consecutive crash of it coming down even further. So definitely keep that in mind. Whatever you want to do, watch the markets first. Don't FOMO in and don't FOMO out. That's also the other thing. You don't want to have a FOMO out because you could bounce. But keep an eye on it. Watch it, understand it, see if you want it. If you believe in Wish and you want to hold it for the next 10 years, you do you. If you were doing it on a short trade, you've probably hit your stop loss. You're at after hours right now. Stop losses don't usually trigger. You're manually probably selling this. Keep that in mind. Lick your wounds, adjust and learn what happened. Take a look at what happened here, and you can probably learn for the next one. Shout out to my desktop that just loves to pop up sometimes, and I don't know why I minimize that. I wanted to pull up Tattooed Chef. Tattooed Chef is the next one. Why isn't it showing up? Okay. Oh, I forgot. Benzinga Pro's here. Tattooed Chef is the next one that I want to discuss shortly. Then I want to go to Airbnb. They missed their Tattooed's having a hard time, which is very frustrating for me because Tattooed. Look, I'm out of Tattooed. I sold Tattooed Chef. So when the markets started adjusting, I'll show you Tattooed Chef's chart. When the markets started getting shaky and CPI data was getting worse, I think it was around the $22 area. I don't think it was this late. I think it was around the 21, 20, somewhere around here. I got out of Tattooed. I said, hey, look, I'm wiping my hands clean of Tattooed for now. I got in around $10, so I was up 100%. I was very happy with it because I had it back when they were FMCI. Man, I got like a wave of nostalgia just now during that whole SPAC era. And I still love Tattooed Chef. And I was just like, right now, I need to concentrate my portfolio into stocks that I'm more confident on. Now, Tattooed is one that I really like long term, but I know that I can probably get it for cheaper, hence cheaper, right? Richard, that's not good. If Kramer likes Tattooed Chef, that's not good. I'm just kidding. I have nothing against Kramer. I'm totally joking. But Tattooed, let's take a look at this one quickly. I do see your comment coming in for Airbnb. Patrick, I will go over Airbnb next because I'm finally might be inclined to open a position in Airbnb tomorrow. So I will definitely touch that next. So revenue, here we go. Let's take a look at it. I won't spend too much time on this one, but revenue was 50.7 million, up about 45.9% compared to the year over year. Tattooed product revenues was also up. Okay. Gross profit was 8 million, up 15.7%. Wow. Here we go. This is what's hurting it right now. The massive net loss. Now, why is Tattooed operating at a loss right now? Tattooed is operating at a loss most likely due to, and we can see here, their operating expenses have increased from 13.8 to 15.9 million. They're doing promotion and marketing. That's what's caused an increase in their spending. Their net loss of 53.2 million in the past 3 months compared to this year over year. There was a one-time non-cash expense of 46 million included in the second. Oh, this is what it is. Okay, we have to go find their 10Q because I need to see what this 46 million one-time cash thing was. If it was an incentive payment to someone, that deters me significantly from investing in Tattooed Chef right now, because you don't make incentive plans for people at this time, when you're in the middle of a transition, in the middle of growth, when you're a newly public company that just de-SPACed. You don't do that. That's not smart. They haven't put it out yet. Their 10Q, this is from last quarter. We can go to Tattooed's website. They've got a really good, cool looking website. Tattooed Chef. They also have a direct-to-consumer D2C for their items. And as you can see here, it's a beautiful website. It's aesthetically pleasing. Box art is aesthetically pleasing. It's not even aesthetically pleasing, like a palately pleasing food. Like the food I've heard is fantastic. Costco loves it. Target, it's their best rollout they've ever said that they've ever had. Recent news events. Let's see. Hopefully they. Okay, no, that's from 2020. Okay, no. This is the thing. Some of the website, the banners are too big. Financials, SEC filings aren't going to do anything for me. Quarterly results, Tattooed Chef, financial results. There we go. I just hope it's not a parallel to what we were just. Yeah, it's a parallel to what we were just looking at. I need the actual there. Okay, here it is. Okay, I take it back. They gave it to us, but I apologize to you. The coloring on this is quite light. It's hard to see, but I will try to find that massive line item, income tax, net income loss. I'm looking for that. What was the line item? 46 million, I believe it was. The number was 46. 46 million result. Here it is. This is here it is. They explain it here. This loss was a one-time non-cash expense of 46 million, resulting from a valuation allowance on a deferred tax asset due to additional investments. Okay, so they deferred tax that they had to pay off. It doesn't bother me. That gives me a lot more confidence now in the company that it was nothing bad. The increase. I'm probably going to open up a Tattooed Chef position tomorrow, or even now. Probably not now. I'll wait till tomorrow. But this gives me confidence in the company. Like, nothing bad happened. We're down. Sure, we're down. But we haven't broken any support levels. Look at this. Support is at 1542. I'm sorry. This is the weekly chart. Support's at 1891. Yes, you've broken that one. Fair enough. Gotcha, Ryan. That support's been broken. What about this support at 18? So we're somewhere in the middle here. We'll probably come and see the 18s and sub 18s maybe tomorrow, but maybe we'll just hold 1850 for a bit. So let's look at the 5-minute chart. As you can look here, it came down and it bounced. It's kind of consolidating sideways in after hours. Nothing to be worried about, in my opinion. That being said, let's go to Airbnb. So Tattooed, I like it. Tattooed's earnings weren't bad. It's a loss because of a tax payment. We all pay taxes. Whatever happens, happens. Where's a good buy at Tattooed Chef? I legally can't tell you that. Personally, I'm probably going to be waiting for whatever happens tomorrow, and I'll probably start nibbling tomorrow. Airbnb. Oof, Airbnb's down. What happened here? Okay, a lot of corrections. Okay, so their adjusted earnings per share is negative 11 cents. From negative 218 year over year, so that's good. They went up. Sales beat, which is good. Companies after. Okay, so what's wrong here? What was the bad thing? Second quarter results. San Francisco. Airbnb from San Francisco. Shareholder letter. All right. Okay. Is that really needed? That's a nice rug. Okay. Experiences booked. Year over 2 years down. But year over year, why would you like? What are you doing? Like, don't report that, you idiots. Yeah, Emil, wish got schmacked. You're 100% right. All right, so nights and experiences booked up 197% year over year. Gross booking value up 320% year over year. Revenue up almost 300% year over year. Net loss of 68 million. This was a loss significantly improved some major year, primarily due to significant revenue recovery. Okay, that makes sense. Due to the coronavirus, not a big deal. Adjusted EBITDA of 217 million. Shareholder letter, financial results, fantastic. This is good. I don't know why is it dropping. It's probably due to lowered guidance. That's probably what's happening here. Is they probably put out lowered guidance, recruiting more hosts. Okay. Host spotlight. All right. We don't care about your host spotlight. Significant guest journey. Don't care. Performance. We saw that already. Thank you for taking up valuable space in a PDF. Okay. Down and then went back up. Good. This is, again, they're doing year over year and then year over 2 year for some reason. I guess I want to show how significantly COVID affected them and how they've bounced back, which is smart. I'll give them credit there. This is awesome. This is good. They're recovering from COVID. Very good for the quarterly results. Congratulations. Looking for guidance. The guidance is the keyword that I'm watching for. And I also want to scroll through this because I like seeing this kind of stuff too. I like the charts that they put in. Here we go. All right, so this is the same exact thing, but kind of in this format. We've seen already cash is good. Very good. 7.4 billion cash. Okay. Unearned fees, about 1.5 billion unearned fees. Okay. I don't know why that's that, but get your money. I don't see an issue here. Yeah, they reported this number by mistake, accidentally, but this is the number. It's good. I still don't see a problem. Like, there's no red flags that are standing out to me. If you're watching this in the comments, let me know if there's any red flags with Airbnb that you're seeing that I'm missing. I don't see anything on guidance reported yet. Year-over-year comparison line, the book good value, good. Gross bookings, blows past estimates. Why are we down 5%? It's probably due to fear of COVID, probably due to fear of Delta, and people are a little bit scared right now. Funny, that's hilarious. So I think that's what's happening here with Airbnb. So let's chart it. Let's see where we want to buy in. Okay, hold on. Let me just check. This. I'm just gonna keep scrolling. There's only 4 more pages left. Bear with me. Glossary. Okay, that's funny. Guidance. Word guidance isn't even in here. Let me search Airbnb Q3 2021 guidance. I don't think they've issued guidance yet. It's probably happening on the earnings call right now. It'll come 2 hours ago. Airbnb earnings outperform pre-pandemic results, but forecast suggest may not last. Okay, where are your forecasts? Revenue quadruples. All right. Airbnb up 2.20 Thursday. Yada yada. Outlook, the lodging company. Airbnb outperformed. Okay. Airbnb is leading. Okay, here it is. This is it. We expect Q3 2021 revenue to be our strongest quarterly revenue on record and to deliver the highest adjusted EBITDA dollar value. Airbnb said to a shareholders letter. They're the companies. Okay, this is stupid. This is good. What I still don't understand what is going on here. Like, why is the stock going down? Let me see. Let me look at the press release. This is the press release. Okay, we will be hosting. Yada yada. I don't see anything. I don't see any negatives. I don't see anything bad. I don't see any red flags. Everything is good. They've killed it. Maybe this error in reporting hurt it, but if that's the case, it's a buy opportunity. Let's look at the daily. We're clearly in a downtrend. Looks like I've mapped it before. We've double bottomed. Double bottom. I love the double bottom. Apple bottom. Okay, we don't want to get demonetized. I don't want to get banned. Clearly, we're here now, but nothing significantly bad. This might even be the support level you held. A little less. 143. So this is kind of the area that you're holding. You're back to about a few days ago. It's not bad at all. What time is it? I think I'm going to buy some Airbnb. This isn't bad at all. This is stupid. This is a stupid sell-off. When I see a stupid sell-off, I take advantage of stupid sell-offs because they're telling me that Q3 is going to be fantastic. By the way, this is by no means financial advice. This is by no means telling you to go buy. This is just what I'm doing right now. Touche, do. Boom. We're in Airbnb. All right. Let me send the alert out to my Patreon members. This is the first time I actually bought stocks live on the show. I've never done that before. Everyone adding shares Airbnb here. Okay, now let's let the Patreon members know. I usually always let them know before I add, but we are in the precipice of the middle of the show, and I wanted to buy them. And the difference between they're going to get it at a better price than I did, like about 20 cents off. I'm down 20 cents. No, I'm down 10 cents a share. Boo. Who cares? Stock ad. Hey, everyone, I get shares here. Slowly. So as you can see here, it's kind of I'm showing you how I'm also operating the Patreon, and they kind of get alerted whatever I want to add or add anything. And this is a company I've been reading up on about for a while. So, and I've been sitting on a ton of cash, waiting for an opportunity like this for this stock and very similar stocks to this. So, this is a fantastic opportunity for me to buy some Airbnb. Okay, that is out. Let me just send this one more over here. By the way, if you have any questions, you can definitely put them in the chat. We have to end the show. So okay, so we're a bit out of time. I'll go over by a few more minutes. Past due earnings on Airbnb, they dropped. You can see this on the previous earnings. Wait for next week and start. So I added a very tiny position, Trader Lewis. Very tiny position, like significantly tiny, not even like a 0.5% holding of my portfolio. It's just a nibble position. So if I see a stock that's dropped like this, that doesn't make sense to me, I can't find the red flag, I just nibble. Jeff just got the email. Jeff, I got the Patreon app too, by the way. That alerts you a lot quicker. Yeah, Jay Kim, I completely understand. It makes no sense. Like, they're doing great. Oh, we're up. Airbnb is up about 20 cents now a share from where we added. If you added with me, you're up 20 cents. Go retweet the Patreon. I don't know. I'm just kidding. But I love here. Like, these kind of things don't make sense to me. SoFi is another one. I want to take a look at it before we leave on SoFi because I know a lot of you love SoFi. You see it's recovering now in the after hours. It's recovering a bit, I believe, from where we saw. Yeah, see 1508. See, if you jumped into the $15 buy, would have been gone. I think by market open this recovers because people are going to see it, realize what it is. You know what? Let's buy some SoFi. Let's buy some SoFi. You know what? No. I'm going to wait till tomorrow for SoFi. I think there's a lot of retail investors who don't understand what's going on. They're going to sell off, and that's going to give me the opportunity to buy more shares for cheap. So that being said, ladies and gentlemen, we covered your favorite Wish, which we're going to take a look at again. I'm going to machine gun through the stocks we talked about real quick. We're going to talk about Wish. Wish shit the bet on earnings, down 20%. I wouldn't buy it over $7 a share. That's just me personally. Support levels are at 735 and 752. Keep that in mind if you plan to buy this and hold it for a long time. Bro, Joe already talked about Wish. Mario, we did an extensive talk about Wish. If you rewind to the very beginning of the show, I spent about 10, 15 minutes talking about Wish. We went into the financials. We went into everything. We described exactly what happened, what went wrong with Wish. So you can definitely do a deep dive. You can definitely rewind and see the deep dive on that. I did Wish. Next, we did SoFi. Let's take a look at SoFi real quick, which we just did, but one more time and just going in order. SoFi took a hit because of their warrants. Nothing too wild. They took a hit. We talked about Tattooed Chef. Tattooed Chef is taking a hit right now because of a tax payment that they have to do. It showed up on their statement as a loss. It affected their earnings, but again, creates a nice buying opportunity. Watching this one for tomorrow will alert the patrons if I do add and when I do add. We also did Disney. Disney is the winner of the night. Congratulations to everyone who had added when I was adding. You even got like a flash crash ad opportunity here. So if you added on this, like there's definitely an algorithm sucker that added on this. You're like, oh, you guys are so lucky if you added on there. But I love Disney, love what it did. So many people watching, not enough likes. It takes a little, yeah. Guys, hit the like button. What are you doing? I'm pretty sure there's more. Hit the like button. Come on. There's 135 of you amazing people in here. Hit the like button. Show these folks what we're doing. I'm extremely long on Palantir. Palantir is my highest conviction stock across the board is Palantir. Airbnb sees year-over-year comparison for nights and GBV continues devaluation steady state growth of our business, and will continue to be volatile and unreliable. No, I get it. I know there's going to be volatility there, but I know that Airbnb is still a go-to even during COVID versus hotels. So keep that in mind. That's why I bought. I nibbled. We also talked about Airbnb, which was just mentioned. Finally bought into the stock. I don't even know, what did I buy into the stock at? I'll tell you guys what I bought the stock at, so you guys can make fun of me if I just became a bag holder. You can all make fun of me. I bought into the stock at 143.80. I am up. I'm up 0.13%. Should have bought more. That's the thing. I'm just kidding. Scaling in is key for everything. We talked about Airbnb. We talked about Wish. We talked about SoFi. A few people are asking me about a specific stock, CTVA. If you guys do me a solid, hit the like button. I'll talk about it. CTVA. I've got no private messages coming in and telling me to get the hell off the network, you psycho. You're ruining everything. But wow, okay. CTVA is doing great. Who are they? I have no idea. Not food and beverages. Let's see. Corteva, who are you? Corteva? Okay, I have no idea who you are. Don't really care to know right now. Stock looks like it's been on a tear, gapped up on earnings, doing fantastic. They're paying a dividend. What is their dividend yield? 1.22%. Fair, not bad. Stock's doing good. Would I buy here after a gap up? Definitely no. I'd wait for a cool off period, or I'd start averaging in. Dollar cost averaging in is always a good thing to do with these kind of stocks. That being said, I do ask for you to do me a solid. If you enjoyed the show, hit the like button. If you could do me a solid, I've got my own YouTube channel. We've got a lot of content there. I've got a new video coming out in about 5 minutes. I'm talking about how I almost got canceled because of a stock. A stock almost got me canceled on the internet. You would have never seen me. I talk about that. The video comes out in 10 minutes. Go to the channel, subscribe, watch that video. You'll understand it. I hope that helps. You'll see the disgusting, messed up journey that I had to go through with that. If you want to join our Patreon, patreon.com/trading together. Sign up there. You'll get into our for Discord. You get free access to a lot of our different cool stuff. Watch list options, a bunch of stuff comes with the perks of the Patreon. Also, Patreon is tax deductible. Sign up for Benzinga Pro, 2 weeks for free. And if you like it, you can keep it. Sign up with Ryan R. Get 30% off for life. It's the only promo code that gives it to you for life. Follow me on Twitter and Instagram. 2 free stocks on Webull if you deposit $5. It used to be $100. Now it's $5. Robinhood, 1 free stock if you want options trade. $10 in free Bitcoin on Coinbase or Gemini if you sign up with these 2 affiliate links. And you buy $100 worth of Bitcoin, you get $10 for free of Bitcoin. So that's that. We also do have stock merch there. If you'd like it, you can grab it. I'd appreciate it. But the most important thing, if I can ask you to do, is the YouTube. Subscribe to the YouTube. Trying to get bigger on YouTube. That means the world. Likes are coming in. Shout out to you, Paulina, for always pushing these folks to hit the like button. You, Jeff, everyone who always comes back and watches. I do appreciate you all infinitesimally for always watching, coming and supporting the show. It means the world that we get viewers on this. And for me, it's like a dream come true to be able to do this for retail investors. Because if you guys know me or don't know me, I don't get paid to be here. I do this for free. I volunteer my time because I love you guys and I love working with you guys. There it is. We got coming in. Albert says best Patreon on Twitter. Thank you so much, Albert. That means the world to hear. Oh, if you guys want to see some results from our Patreon, I can show you some results. Song just posted. We've had August is notoriously an ugly month, but we've had a fantastic month, and I can show you some of the calls that we did really quickly. Work X on Monday ran 50%. That was a penny stock swing that ran 50%. Here we go. We played PFE calls 300%, Palantir calls 100% plus, Fubo calls 50% plus. It was earnings. We did very good on that. Coupang puts plus 30%. We got IV crushed, or it would have been much higher. Tesla calls today up 100% plus. Wish puts, well, we'll have to see how those open up tomorrow. But those so far today did about 15 to 20%. And you can sign up, hang out with us. We also did we're also doing OCGN, doing X. We did a lot of Mara. I ping pong calls and puts with that myself a lot. SPY calls and puts. So we do a lot of different stuff there. Also, we do penny stock swings and trades. I can pull up. Give me 1 second. You know what? I'll pull up a post. We've got a few minutes. No one's yelling at me yet to get off the network. I'll show you. I'll show you some of my results because I like to be transparent with you guys. We're all friends here. You guys can laugh at me if it's bad, and you guys can sign up if it's good. Hold on. Update. Weekly watch list. Important reminder. Option sell, option buy, option sell. Update. Here we go. This was the big kahuna. So these were the new plays we added. if anyone played you printed. So as you can see here, we were swinging. Everything is positive. Geode was down 1%. Everything else was positive. 63% on WorkX. NXTD was 10%. FTFT, Hot 811. So it's just a matter of doing that. And this was just like in a matter of one day. Coin did 120%, Mar did 32, SoFi did 42. Fubo was down that day, but clearly it made up for it, as you saw here, up 50%, even if you added on Monday. AMD puts on Monday did very well. Apple puts did very well on Monday. Celsius was not in play at that day, but if you added it this morning, as we told you per the watch list, you would have done very well. As you can see, you're down 5.7%. So that being said, folks, as always, thank you so much for watching this show. If you'd like to sign up, the link is in the description, ryanstocks.com. And you can just hit this second tile and sign up, or just follow me on Twitter, Instagram, whatever you want. Follow me on Instagram. I'm trying to, if we get to a certain point on Instagram, if I get to 1,000 followers on Instagram, I'll start posting a lot more content there as well, more rapid fire. As we exit Q2 and we come to Q3, we have a combination of fewer bookings for the fall, given the nature of the seasonality of any kind of impacts of COVID concerns. CFO of Airbnb. So yeah, see, that's what's causing a drop, but that's okay. They're still confident in their growth. Yeah, I think it's a solid buy fears of Delta that they talked about. Yeah, a lot of people you have to prepare the markets for what Delta could bring, right? And to me, I think that the vaccine will do what it needs to do, and we'll do that. And Albert, again, thank you so much for your kind comment. Paulina, as always, thank you so much. Jeff, you're the man. Yes, I am long on Palantir. Do you do Body? I do not like Body's company at all. I think the company is severely overvalued here. I think it should be like a $5 stock. Not a huge fan of the company. I'm just rapid firing some questions. CTVA we did. Airbnb sell-off makes no sense. I completely agree with you. It will rip tomorrow. I don't know which stock you're talking about. Oh, it's a sell the news. Okay, so you're talking about Airbnb. We never know. It could be a sell the news and we rip tomorrow. We'll have to definitely see. All right, folks, I'm going to go. I'm going to miss you guys. I'll see you guys next Tuesday, 5 p.m. Eastern Standard Time, 6 p.m., 5 to 6 p.m. Eastern Standard Time. In a few minutes, just 5 minutes, my new video comes out on YouTube where I talk about how I almost got canceled for a stock. So if you go to ryanstocks.com, hit the first tile, subscribe. You'll love to see that video. And I'd like to know your genuine comments. It's a longer video. Bear with it a little bit, but it's an important video. It was a scary video. But it's an important video. I want you to watch it. I teach you a lot about it, about things in that video. So if SEC filings, offerings, all that kind of stuff. So please watch that video, subscribe to the channel. It'll mean the world to me. And I will see you all next time. I hate to leave you all. I have so much fun hanging out with you guys, but I got to go. See you later. Hit the like button on your way out. What are we at right now? We're at 76. Can we get it to 80? 4 of you awesome people want to hit that like for me? If not, no big deal. All right. Catch you guys later.